why do we need to adopt the risk strategy? It's going to sound a little bit obvious, right? And we're all going to go, yeah, of course I know I need to adopt a risk strategy. Yet 95% of traders don't adopt a risk strategy. They don't have any approach to developing what position size they should use. And with futures, because it's leveraged, by definition, we have to pay very, very close attention to the position size I'm using because, like I said, yes, the upside's magnified. Yes, the potential to profit is magnified, but so is the downside. And that's why, particularly in futures trading, we've got to make sure we take care of risk management first. Now, there are 5 reasons why you have to ultimately take care of your risk management. One is survival, right? Like I showed you on that equity curve, ultimately you've got to survive that first 18 months until you've gained that sufficient experience and developed that edge. If you don't have any capital, you don't have capacity to trade alone. That's just a fact. Risk management will ensure that you get beyond those first 18 months. It'll make sure you survive. It'll make sure you don't have that unnecessary drawdown. Then risk management ensures that we're not biased. Okay, when you have a predetermined strategy that ultimately tells you buy 2 lots, buy 5 lots, buy 6 lots, there is no bias involved there. It's predetermined and it's systematic. In other words, it's done automatically for us. So with a risk strategy, every position is predetermined and we cannot be subject to our biases. With risk strategy that is predetermined, we're 100% consistent in our application. And like I said, the key to risk management is to just apply it in the consistent way every single time. That's what makes it powerful, not the math. Finally, or second last, blow-up days are a huge setback. Okay, when you have that deep drawdown, you will recognize that feeling of fearfulness, that feeling of, I don't trust my system anymore, that feeling of, how am I going to get this loss back? So why take that loss in the first place? Okay, it simply just sets us back in terms of progression significantly. So it's not worth it. We have to avoid those deep drawdowns because we need to protect our progression and make sure we don't, suffer the consequences that come as a result of not managing risk. Okay, and then finally, if you're scared to lose money, and this is for almost all traders, and the younger you are in terms of your career, the more afraid you are of losing money. The reality is if you're emotional when it comes to managing risk, it's because you're not managing risk properly in the first place. Okay, so with a predetermined risk strategy in place, you can accept risk before you assume the risk. In other words, before you click that button on your mouse, before you take that long position in the S&P 500 breakout, you already know what the risk is that you're going to put in the market. You know what that position size is. It's pre-calculated, predetermined, but pre-thought about. You've thought about it and accepted the loss even before you've put the trade in the market. Okay, what that helps you do is eliminate emotion completely from the equation.